All right, ladies and gentlemen, can I get a mic check from somebody in the chat, please? All good. All right, let's get started. Welcome everyone to the Tools of the Trade live stream. I'm your host, Captain Cole, and I'm joined by my co-host Trip, also known as Crypto ISO on Crypto Twitter. We have an awesome live stream planned for you guys today with a very special guest. But first and foremost, would all of our incredible viewers do me a favor, make us look good for the YouTube algo, hit that like button and subscribe. Also want to take a quick second before we jump in to thank our sponsor Phemex, one of the only non-KYC derivatives exchanges left in crypto. Trip and I have been trading there for a while now, and since we trade there, so should you. So click the link in the description to get up to $6,000 in welcome bonus. Okay, so now that I'm done chilling, the last thing I'm going to say is that nothing we say here on the Tools of the Trade is to be considered financial advice. We are not financial advisors. This information is for entertainment purposes only. Cool. So now that we got all that out of the way, Trip, how you doing, my man?
I'm good, man. We got some nice volatility in the markets. I feel like we're back to our bread and butter of liquidity trading, and pretty excited to have XO on. I haven't talked to him in a while, and we used to basically talk daily, but I've been away enjoying myself skiing, and so it's always good to get his perspective. Yeah, I think he's going to have some really interesting things to say about the macro landscape, as he's really honed his skills last year and figured out, a large shift in the market and how capital was flowing into things. And so we know that he nailed it on the short side last year. I think he had some pretty good shorts last week. He's just your typical systematic trader, and he's figured out what works for himself. And so I think it'll be good for all of our guests to hear kind of his approach to the market. So excited for this.
Love it. Yeah, well, I don't know about you. I'm super excited for today's episode. We have an absolute of a trader joining us today, a man who needs no introduction. If you've ever been on crypto Twitter, traded crypto, or even FX for that matter, you all know him, the one and only Trader XO. Welcome, brother. How's it going?
Hey guys, hope you're doing well. Thank you very much. An absolute pleasure to join two of my old friends in the space and two absolute chads, and hello to all the other chads and chadettes. Hope you're well. Thanks for tuning in. Going good, man. How about yourself?
Doing well as well. I mean, a lot of volatility in the markets. We've been talking for the past couple of weeks, and you are the go-to macro guy in our fishing club little group chat we got going on there. So I'd love to just kind of kick things off with some just macro takes from you. You've done a very good job the last couple of years, really honing in. And I think one of the big things that I love about you is that you're always looking to improve, man. I remember watching you trade last cycle, and then seeing you now pivot to more macro-oriented focus. It's motivating to see you constantly pushing the envelope and trying to refine your system and push the boundaries.
Yeah, thank you, man. No, it's been a while. I recall back in the day, you, me, ISO used to be in a Telegram group, if you recall, back in 2019. Good time. So we actually go back quite some time now. I think it's been 4 years almost.
Oh yeah, man. We're long time friends.
It's been an epic journey, hasn't it?
It's been a while when you look back at how I think when we first met, XO and I, because this was before I even knew Zorn in beginning of 2019.
Yep,
I actually met XO in like 2017, 18. I feel like, so it's been a while.
Yeah, it has. It's been a while, and I think my first recollective memory that I have with ISO is the the 10 to 14k region in 2019, where everybody was super bullish, and I think me, ISO, and a couple of others
Myself
really,
included.
yeah. So we were like, "No, dude, this just looks like distribution up here," and lo and behold, the rest is history, really. But no, it's an absolute pleasure. I think I absolutely love talking. I think there was a period when me and ISO used to talk daily, because the markets are pure just liquidity plays, looking for liquidity, and I think we nailed some absolute beautiful trades during that period in terms of confluence between myself and ISO, and it really did wonders for my own trading back then as well, in terms of my win rate went up. And yeah, it's just nice to see we're back to basics again in terms of what price is doing, where we are. You've got all these range bound liquidity environments, trending environments, and I think I said at the start of the year in 2022, welcome to the liquidity games on Twitter, and so far I think it's going to continue for the next several months. So exciting times ahead for us guys, right?
Yeah,
Absolutely, man.
This is my favorite environment to trade, to be honest. It's just fast paced. You're in and out. It's super liquidity driven. You're looking for offsides opponents and exhaustion points, and I think there's obviously been some really good ones that we've seen as of late. So yeah, but before we get into any of the kind of charts, specific coins or whatnot, maybe do a high level overview of Bitcoin and Ethereum, or maybe your thought process on general kind of macro sentiment, because there's clearly been some sort of a shift, right, since we started this year, even though you can argue that, things are still bad. But I think the whole concept of like how to trade this market is like, is it really that bad, right? And what are the masses, or what does the sentiment think about that? And are we getting to a point where rubber's going to hit the road in some instances? I mean, I personally think like February is chop month. It could extend to May, but we just had a very big move, and whether it's distribution or just reaccumulation and consolidation, I mean, this is where the range is set up, right? And that's kind of what we just talked about. So curious under your thoughts on that, and maybe even a little color on CPI. I mean, I thought it was kind of like, it was like a mixed number. I feel like a lot of these numbers that are coming out relative to what happened last year is like, you won't have such a big delta in consensus versus estimates because there's a bit more clarity in how the data has flowed through, and maybe there's not so much discrepancy in things. And so, yeah, maybe just quick overview on some of that as well.
Yeah, absolutely. I think in all honesty, too many of us, or too many individuals, discern themselves with macro, and then they get swayed by their macro bias from a trading perspective, and it can impact their trading in perhaps not such a desirable way. And I think one of the lessons that I've learned is that the macro trade can take an absolute time to play out. It could take weeks, it could take months, it could even take 2 years. So you really have to segregate or separate the concerns with thinking in macro as an investor, but then separating your views as a day trader or a swing trader, because nothing much has really changed. And when we look at the charts here on Bitcoin, we've all talked about the doom and gloom and the optimism with equities could go to new all-time highs, and you got the other side of the party which is telling you equities could break down into 3,000 level. But really, when you look at the charts from across the board, it's just all one big trade. It's fascinating to me that here's a chart on Bitcoin. This is a June candle. We've spent 9 months within this range, and that is a considerable amount of time for Bitcoin to range in this environment. Meanwhile, there's a lot of macro heads that are still debating and discussing. We've seen the audience of the crowd go from Fed pivot to Fed pause to now the fact that 25 basis point rate hike is bullish, or because inflation is coming down, that's a reason to be bullish. So the narrative keeps changing out there. At the start of the year, we were talking about recession being priced into the market, and then we're going to head into recession in Q2 or Q3. That now seems to be pushed out onto the curve in terms of where we now see three theses or three sides: the soft landing, which I think is very unlikely; the hard landing, which is the recessionary environment, And then there's the inflation remains sticky, which I think is a favorable outcome, which could mean that rates remain higher for longer, and such that we could see recession much later down the line, possibly towards the end of 2023, early 2024, unless something drastically happens. But what does that mean? I think that essentially you can infer the fact that, well, if that's the case, then as an investor, do you really want to be buying into stocks and Bitcoin or altcoins, knowing that there's a probabilistic outcome that we could see further pains down the line? We could see lower prices, from where prices currently are. But then as a trader, this is what you live for, right? Because I think anybody who's running macro portfolios or trying to build a portfolio, they're going to get destroyed. It's not going to be the same environment that they've been conditioned to as of the last 10 years or the last decade. Low rates, forever QE. It's just been a one-way ticket in terms of investing in the stock market. But I think now for the next 2-3 years in particular, we are going to see an ebb and flow of liquidity coming into the market, coming out of the market, whether that's via the reverse repo facility, whether that's China reopening. And again, just across the board, I think the conditions are prime for anybody who's a highly skilled technical trader. This is a very, very technical market right now. And I think that's going to be the case for the next 2, 3, 4 months at the very least. Meanwhile, everybody on Twitter, especially crypto Twitter, is debating whether this is a bull market, a bear market, an echo bubble. At the end of the day, when we look at it zooming out, we've just been contained within this range. That's all there is to it. It's as simple as that. You look for selling opportunities at the range, or you look for buying opportunities at the range, or from a higher time frame. So in perspective, and that's all I've done really, is keep it very, very simple.
I love it. Could you actually take a quick second to kind of break down how you look at ranges in general? I think a lot of our viewers would benefit to hear kind of your mindset when approaching ranges, range lows, deviations, et cetera, et cetera.
Yeah, it's I think I do this regularly on my streams as well. And my point is such that, look, I think this is a strategy that I've refined. I was introduced to trading ranges and dealing ranges by SC back in 2017, 2018, and really refined my own take or version of how I trade the range. Essentially, you can map a range on any chart, whether it's a 5-minute chart, a 1-hour chart, a monthly chart. And essentially, all I'm looking for is those extremities of any given high time frame range. What do I mean by high time frame? Anything from the daily to the weekly to the monthly. Because what you find is that at the range high, not the range low, I'm just finished drawing out a range here. Those are the extremities of the range. Now, there's a few reasons why I like doing my trading at those levels. Because one, you're likely to see a very good reaction from these levels, okay, when price comes into these levels. Secondly, it helps me understand how I'm looking to get on board of a trade. And thirdly, it depends on the context of the environment. So if price is in a range-bound environment, then for me, it's just a matter of ping-pong, trading the range until we get a breakout of the range. The other context is price coming down in a trending environment into the range lows. This is where you have to think about how you're going to execute at the range lows. Just because price is coming into range low does not necessarily mean that you start buying at the levels. What I generally like to do, I have a very simple two-strategy trigger point. It's much more refined, props out of the context of this video. But when you have a trending environment, price is coming into range. Essentially, what I'm looking for is any deviation below, reclaim back inside. That to me is a favorable option that gives me conviction that I can possibly play this to the range quarter or the mid range. Okay. The second option is that, okay, if price is in a trending environment coming down into the range, I may start scaling 1/3 here, knowing or accepting the fact that I could be wrong and I could be early onto the trade and it could push further down, stop me out. Then all I'm doing is essentially waiting for this to go as far down as possible as it likes before it can come back and reclaim the level. Then I'll go again and take a second stab at long in the market. Again, same targets, range quarter, so range high. So the favorable scenario is when you counter trend trading is wait for the deviation play. And when the trend is in your favor, so say, for example, if it's just in a range bound environment, then I'm more comfortable taking perhaps a retest of the range low, price consolidates, builds, grinds at that level. Then I'll start scaling in, looking for a shift in low time frame market structure, a higher high and a higher low on the lower time frame, such as a 1 hour to put more size in, and then looking for the reversion play back to the mid. So that's kind of the context of how I use ranges. I never get involved at the range quarters or the mid-range. The mid-range, I may get involved if it's a higher time frame, but if it's anything less than the daily, you'll often find there's a lot of chop. You're met with basically equal buyers and sellers. But at the extremities, this is where you can execute a strategy such as you're looking at order flow. You're looking, for example, on Bitcoin, you're looking for late longs to get trapped into this region, and once they're trapped and price pushes them offside, they're going to puke. You're going to get that fast move down, and equally it's the same. So you're looking for trap sellers, and essentially it's the same. You're looking for that unwind of shorts, and you get these fast moves back up again. So that's basically the 101 high-level overview of how I trade ranges. I think it may differ for other people out there, but that's essentially 70% of what I do, and I've refined it to such a way that I've got a very, very successful win rate when I trade these high time frame ranges.
Holy shit! Wow. That was just a knowledge bomb and a half, man. I just learned a whole bunch of new stuff, and I'm positive our viewers are just frothing with all this knowledge. Amazing, man. I really enjoy how you kind of talk about the mindset behind it, because I do know one thing about you is you have an extremely high win rate for a quote unquote crypto trader, and I think that's something that I've always kind of appreciated and respected about you is you really wait for trades to come to you, and you're really good at exercising patience. And I think that's one of the most underutilized edges most discretionary traders like us have. It's waiting for those setups, seeing price come into your level, seeing what you want to happen, and if it's not happening, you wait. It's simple as that, man. So kudos, man. I'd love to hear more about your thoughts now. Besides just the macro landscape, let's talk a little bit more specifically about Bitcoin, Ethereum, and kind of the majors and what you're seeing moving forward for maybe the next week, maybe the next month, or the rest of the quarter even.
Yeah, I think it's interesting, Zora. It's I really don't have a clear read on Bitcoin, if I'm entirely honest with you. And is it an asset where, at this stage in the market cycle, with where we are, that I believe the lows are in? I think that's up for debate. I'm not somebody who's going to say or call 12K, 14K as a bottom. I practically couldn't care where the bottom is. I think what's more important to me is aligning my macro view as an investor. Okay, now the caveat to all of this is that, say hypothetically we see a recession towards the end of 2023 or 2024, whenever that is, I still think and I believe that regardless of what the economic situation out there, if we look at the next halving, which is in May 2024, I think we still have over 400 days to accumulate and prepare to position ourselves in for the next halving. And we know historically that every halving, preceding the halving and post-halving, Bitcoin performs really well. So if I'm a betting man, regardless of the economic situation, I still believe that Bitcoin as a beta asset class to equities will outperform majority of markets out there. And again, we can see that capital rotation come back into the altcoins at a later date as well. So, overall, I've said it time and time again, people assume that I'm bearish. I think the time to be bearish was many, many, many months ago, last year. Now I switched my mindset to the point where it's just a matter of being patient, and I'm looking for really good buying opportunities over the coming next 3 to 6 months. Whether that's a recession, whether that's something breaks in the system, I don't know. And I think the pain trade, in all honesty, is the fact that we could just go sideways for the next 6 months, just like we've done. We've spent 9 months within this range. Is this likely to be the accumulation range where we could see a swing fill off the range highs, everybody gets bullish, comes back inside, takes out these lows here, back to the yearly open, deviates the yearly open, gets back inside, there's your 14K, there's your 28K. It gives you such a very simple, clear invalidation level that if you are to see such an environment where it swing fills all these lows here, this is going to probably act as your spring. That's going to mark the low, in my opinion, for the cycle, and we start seeing price shifting higher heading into 2024. I still think this is, when we think of accumulation ranges, I still believe that we are at the first few phases of an accumulation range, and there still is some considerable amount of time to go, because this is the first time Bitcoin has been in a recessionary environment. So, very, very difficult to say what's going to happen next.
I love it. I love the honesty, first of all. This is a no bullshit. This is a real trader, guys. First of all, let's just put that on the table, right? This is someone who has a bias. He'll trade it that way. And then if information comes that conflicts his bias, he'll reassess. And that's what traders do. They're constantly reassessing their bias and they're executing on said bias. But the fact that you just brought up this, this macro range, I didn't even think about it that way. I was too dialed in into the medium time frames, looking at that like 15 to 18K deviation. But when you just showed it like this, man, this almost adds more confidence to my bias of this quote unquote echo bubble running to 28, 29K, and then potentially going back into the range that you just outlined. And are the lows in, like you said? I don't know. I don't think we really care. If you buy in this accumulation range, it's not really going to matter. 6, 9 a year, however many months later. If you're buying in this 15 to 20K area. So I really like that. This lines up with my bias. Even when we're looking at this Wyckoff accumulation schematic, right? And it's like people are going to be looking for that spring in phase C, but maybe we don't get it, and it's just sideways, like you said. The pain trade really is just sideways in this macro range. I love it.
Yeah, I think so too, Zoran. Look, unless something drastic happens out there in the markets, look, I just think the lower Bitcoin goes, the greater the opportunity, and you've got to be excited at the fact that you may get to buy Bitcoin back at 15K, 14K, possibly a real shakeout at 12K. And I think one thing I've learned from you as well, you often talk about backwardation during some capitulation event. Did we ever see that?
We did. We saw it after the FTX candle. We saw $500 backwardation in that like 15 to 16K range for about 7 days. I was unconvinced that was the bottom just because I was waiting for that capitulation wick, but the spreads were blown out. I mean, backwardation was significant.
Yeah. So I think overall, when I look at the charts, I just think this is essentially. I mean, if you look at it from a monthly perspective, we haven't even broken market structure, to be honest with you. Zooming out, look at the chart. I always start from a high time frame context because of the fact that we've been in such a tight range. This is our Q swing lower low. We print another lower low, and this is a lower high. So we haven't even broken market structure on a monthly chart. Yes, you could argue on a weekly that the price is printed a higher high, but we know really the real context, if you want to be bullish, is on a monthly context. So for me, I really need to see a shift in market structure on the monthlies. But I still think we're a long way from, when I say long way, I'm talking about, I still think we are going to go through a phase of accumulation, even if we do see 27, 28. I think it's not done and dusted. We could see another move back down over the next 6 months down to these range lows, in my opinion. If you look at this from as a 1 hour chart or a 4 hour price fractal, is just a bear market rally before we get an accumulation range, which is going to be really drawn out, and everybody's probably going to be bearish here once again, like they were down here. So it remains to be seen, in my opinion.
I love it.
Do you ever look at the so the wicks, like if you go back to that time frame, like do you ever think that the deviation is actually like below those wicks? Right.
I've thought about it, ISO, and for me it's very, very simple. For me it's very, very simple actually. I look at this market here, and I think this will have a role to play, the previous range high here, and you'll see how it caps price nicely at support here. Is this a deviation? I think if there is a deep pullback and we can hold this level here as a higher low,
that's my almost on it. I mean, look, I can see it going both ways, but I can also see that kind of area down there, like where and then like the just the impulse of those candles. I would say that that level will be defended initially. Whether that holds is going to be something that happens. But like for me, like when I look at ranges, you got to find the most touch points that make sense for the range low and the range high, right? And so on the top side of the range, clearly we had so many on the bottom side. You can, even if you don't use the deviation, even if you actually take just like the bottom wicks of that, the top side still has room for that deviation. And that is that's where like you trap everyone, as you said, and that makes the most sense to me. And then everyone tries to buy a retest of that, and then it just falls through, and then you're at mid-range before you know it, and then you're maybe back down to that deviation or those lows. Dude, that could take like 3 months. That's the thing that like I think people have hard time grasping, is the time you can spend in a range and how long it might take to go from one side to the other, especially when you're trading daily and weekly charts.
Yeah, agreed.
So I'm just looking forward to literally trading like the chop in the range around all the liquidity, because it's clear that like it's a very volatile and cannibalistic like price behavior at this point. Like we trended January, right? So now like February you're gonna chop everyone up. Like and it could still go up and like do the deviation, but on the whole way down, like it can take a while to get down there, but like you can still trade in between. You just have to have that mindset, as you said, of it's not a trending in market. It's like not really a trending environment. Like from a market structure standpoint, nothing has proven that yet. We haven't taken out those highs up there. So yeah, I'm just looking forward to finding some interesting coins that have a lot of volume, a lot of volatility. I don't really trade BTC and ETH that much, to be honest. The returns are elsewhere.
I agree with that.
It's kind of fascinating now to hear you say that, because back in 2019, you, I, and Soren, we were primarily focused on Bitcoin, although I did use to sling shit coins more often. But it's great to see you guys evolve your own game and trade the volatility on shit coins. I think you both really thrive in those environments. And it's just really great to see how far you guys have evolved your game. The principles are still the same. But I remember the core bread and butter of your systems are still the same, but the markets that you now trade are more varied. So it's really great to see that adaptation to
I think one thing as a trader, the worst thing you can do is become complacent, because the market's constantly evolving. I mean, especially in this environment. So staying on top of your game and understanding like what drives capital flows and where the interest is, whether it's a narrative or just based on liquidity, like that's something that I always try to hone in on. Like I bought NFTs and people were like, what are you doing? I'm like, well, it seems like a new idea. Right. And then there's all sorts of opportunity in the market. If you pay attention enough, you can just become very complacent trading BTC and ETH, and that's totally fine. I just, they didn't move as much for me on a regular basis, outside of like, well, obviously what we saw at the start of the year, but like, I don't know. I mean, you shorted a bunch of altcoins last week, I think, on range high deviations in some instances and closing for CPI. Like that's the mindset you have to have, not holding it to range lows, because you got to also accept the fact that they can still go higher, right? So
absolutely,
it's in and out ping pong trading, super fun.
Yeah, I will say for me, it's really like, I've learned from you, Exo, and I think that's one of the biggest motivations I've had, at least the past, 9 months, is to kind of start adding in stuff or adding in markets I want to trade. Because if you get complacent, man, that's what I did last summer. Was I got complacent. I didn't feel like trading anything else. But when I see you guys working hard, and I mean, I talk to ISO a bunch, and I hear about his takes on altcoins, and then I see you, Exo diving into the macro and just continuously improving as a trader. That's what motivates me to be like, all right, it's time to get off my ass. There are people much smarter than me, more skilled than me, continuing to push the envelope. And like, what am I going to do but sit here and, play with my dick in my hand? It's time to get out there and improve my own system as well. So I just want to say thank you to both of you guys, because you guys motivate me to kind of push the envelope. And otherwise, I'd still be trading just Bitcoin and ETH.
Yeah, but I didn't know how to trade Itchy before I met you, so it goes both ways. I was not open to learning a new Ichimoku. Like, sounded absurd, but in the trending environment in January, like low time frame Itchy was like buy that, and when it matched up with liquidity, it was good. So yeah, healthy conversation among traders is good. I mean, I often find myself being like, well, I don't like trading other people's ideas, but I will use it as perspective, because I think as a trader, you need to understand self-discipline and when you're wrong and why you're wrong. And if you're copying people, it's like you might not benefit as much in the long term, but perspective is key.
And you won't even understand their systems, right? So like you, me, and Exo and SC and a whole bunch of other people talk on a daily basis, and I'll always, care about your opinions. But at the end of the day, we all trade our own book. We're responsible for our own profit and loss at the end of the day. So it's imperative that we understand why we're taking the trades we have, and then weigh in other people's influence to the extent that it helps inform us, but not necessarily shape our bias.
Yeah, totally agree. Should we get into some charts for specific? I mean, do you want to look at BTC and ETH, Soren, or how do you
No,
guys want to?
I'd love to kind of hear what Exo's looking at for shorts, right? Because like right now we're talking about altcoins, and Exo has a very good take on shorting things like Matic and other coins, etc. So I'd love to get the man's opinion on what's hot right now and like what's worth looking at.
So yeah, it's very simple for me. I just want to say, just taking it back one step, I want to thank you guys because you guys introduce the whole aspect of liquidity theory and using Hyblock Capital, fishing for liquidity or where liquidity hotspots were. And you know what? It's surprising because obviously people have never seen me post those charts, and I had no reason to until the last several months where we are back in that environment. So special thank you to you guys who brought that on my radar, and it's been such a fantastic tool for me along with everything else that I use. With altcoins, it's very simple for me. I start with a holistic view of the markets, right? Looking at total 2 first and foremost. And if you look at total 2, you can see that we are in this range bound environment, albeit we haven't broken market structure yet. Again, we've got a lower high, another lower high, and another lower high. And in terms of trading, right, sometimes you have to, and I talk about this, pick your battles and win the war. You have to decide at which point are you going to absolutely floor it when you start sizing up. And for me, once again, it's when I've got a very good invalidation point. Those are the areas where I think about now's probably going to be a good time to short the market with some real size. So, I was away for the best part of January. I couldn't really trade too much, but I come back to the markets full time, first week of Feb. I'm seeing all this bullish euphoria. I'm not saying I'm a sentiment trader, but all I'm recognizing is, well, the upside is very, very limited. But hang on, we could get a really nice move all the way back down, potentially all the way to the yearly open. That's something I want to take advantage of. So looking at total 2, very, very simple. You can see if we are in a downtrend and price is printing lower highs, it should respect market structure. We shouldn't really come above this high here from a market structure perspective if we're going to continue respecting the trend to the downside. And that's essentially what helped me have that bias or premise that anywhere up here, very close to the range highs, is probably when I'm going to start looking to short the market. And then just throwing a trend line here, you can see how price is just rejecting. It really needed to see a high volume aggressive break above this level for me to have considered myself, okay, I've got a tight invalidation here, reclaim this high, I'm cutting it out. I'm cutting the market because I'm getting out the market from the short side, because at that point I'm waiting for a deviation on total 2. Then I look to short alts across the board. So first of all, this is what starts my high time frame context on how I want to position for alts over a high time frame environment at the extremities of the range once again. Okay, range lows, range highs. This is where I do my business at the range highs, and this is where I do my business at the range lows. And this is why I spoke about late December that now is not the time to be shorting altcoins. The time to short altcoins was a long time ago. Don't be surprised if over the next few weeks you see 1 or 2 weekly candles wipe out 3, 4, 5, 6 months of selling on altcoins because of how thin liquidity is on the books. Okay, and I think what this drive has been up is primarily been derivatives driving altcoins. I don't think it's so much spot plays or spot buying. And it's essentially, I think we're just going to see inefficient moves. We've had inefficient moves on the way up. If we look at Phantom, for example, which has been one of the stronger performing higher liquid coins, this to me looks like a market cycle. You've got this aggressive push off the range lows into the mid, consolidation up to the range highs, confluent with a weekly SR level. It doesn't get any cleaner than this for me. And when you align this with the bigger picture, what is the dollar doing? What is equities doing? What is Bitcoin doing? What is total 2 doing? They're all like key resistance levels. And that's where I really start thinking about, okay, now I really want to hone in on my execution here, because I do believe there's going to be a very good, favorable swing trade to the downside on Phantom. So all I'm looking to do then at that point, if this is my weekly SR level, you can see how price was holding up very well at this level in April. And it wasn't until May that we had an expansive sell off to the downside. So this was always going to be an origin or a point of interest. Dropping down onto the daily chart or the 4-hour chart, I should say, I think there was a swing fill on the left-hand side, which essentially was going to act, or this SR level, which was going to act as my invalidation level. So if this is my pivot or shelf, if that's what you want to call it, they're moving across the line. You can see how that is capping price. to the upside, 1 retest, 2 retests, shorted 63 cents. Invalidation would have been acceptance above 65. All I'm looking for now is a break in market structure, a break in the trend line. That's essentially what we got. There's my confirmation to hold it for a swing back down, taking out all these inefficiencies on the way up, filling in at the mid-level. And you can see now what I'm looking for in terms of phantom. If I believe the highs are in, which I do believe the highs are in, I do believe this is a phase of distribution. Looking at shorts being heavily positioned or heavily skewed down here, this, in my opinion, should be a low volume complacency bounce before we start seeing price rolling over. So what I'm looking for is generally a 0.618, 0.705 fib retracement. So far, we're not even at the middle of the range, so I'm not looking to short this yet. I still believe this could go higher. Once long start piling in and you look at the deltas and it's heavily skewed to the long side, all I'm looking for is an over above this range quarter, get back under. There's my trigger. There's my stop. I'm targeting new lows. Why? Because I'm looking to flow in the direction of market structure. This was a high. This was a, you could argue this was a higher low, but we've made a lower high and now we've made a lower low. I'm looking for another lower high, turning point, smack it back down to 30, 35 cents. That's essentially the trade that I'm looking for. And just to conclude, to give me a strong bias, one thing that I did really well in 2022, just for confluence, using a simple set of moving averages. Now we know price is fractal, so it all depends on the time frame that you're looking at and the magnitude of the move in order to select what type of moving average time frame works best in these scenarios. So I often start off with the 12 and the 21. The daily, you can see here how price is starting to push up into the bands. So if we do get a squeeze, but price rejects off these levels and gets back inside of the 12 and the 21, I think it's lights out, in all honesty. And again, I'll give you an example. If you look back at the previous cycle, where on Phantom, on the daily chart, once the trend crosses over, I'm just going to flow with the trend of market structure. Let market structure dictate the overall direction. And all I want to be doing is taking trades in that direction until there's a shift in market structure. For now, I'm just waiting to see if we get the complacency bounce. My invalidation would be trading or acceptance above 60 cents. If we get acceptance above 60 cents, then I would probably say, all right, there's a probability at that point we're going to make new highs in 2023. And maybe at that point later, I'll look for a deviation, get back under this level, then short it all the way back down to mid-range. So basically just slicing and dicing the charts, playing it level to level, understanding the basics of market structure, market cycles. But when I look at this chart from a high time frame perspective with a naked eye, looking at this on a 4-hour perspective, this to me looks like a 4-hour market cycle, more or less. You can see we're already breaking structure on the 4-hour levels, right? So, you know, this was an immediate swing low, swing high, swing low, swing high, comes down. There's your breaking market structure for me at this level here. We broke below here. There's your lower low. There's your lower high deviation. That's your trigger point to get on board. Shorted 63, shorted 55s. Took out these lows here at this level. You can see into a level of support. This was the previous consolidation breakout. Okay, retest the levels now. Are we going to see another lower high over the coming weeks or week? There's the high, there's a lower high. I'm looking for a lower high at this point. If we can get a push up into here and reject, then again, I'm looking for shorts around about the 55, 56 level, because this was a previous swing higher low, which got invalidated. Deviation. So again, any deviation up close to this level, get back inside. I'm probably going to short it to new lows. Well, not new lows, but new lows in terms of this current leg.
Holy shit, man. This is just alpha and a half. First of all, I just want to take a second, break things down backwards. Before you talked about, looking at the total to market cap without Bitcoin, I think that's a super interesting way of just actually understanding the high time frame and then breaking it down and turning on basically a bias, right? They talk about the whole total market cap. You're like, all right, market structure is to the downside. I see lower lows and lower highs. As price got to this lower high potential area, it hadn't deviated and broken market structure. You're saying, okay, this is probably the highest, RR position to actually start shorting some alts. So first of all, I think that's alpha and a half. For anyone who's listening, absorb this information to get a high time frame look of how XO is actually looking at the market from a high time frame perspective before he actually starts looking at which specific alts he wants to short. And then he just talked about Phantom kind of breaking down the range, the high time frame range it was in, and saying, you know, when price gets to this near the range high, that's where he wants to do business. So this is a really amazing example of a trader, first of all, who knows his shit, but not only that, he's very patient. There's a reason his hit rate is so high. It's, I think, in my opinion, one of the highest hit rates in all of crypto, just because of the way he's patient and the way you talked about, you know, if you wait for a range to happen, you'll wait for the deviation, then add some size. And I've always noticed that about you, that you never go full clip in at any one level, and that kind of gives you wiggle room to maneuver. And you know, execution is everything in this business. So I really appreciate that, man. That is awesome.
Yeah, I think position sizing is a skill in itself, and I've got to thank SC for that, because I used to, you know, me, SC, and NJ, I've been in a WhatsApp group since 2018, and I used to watch SC really fucking load up on FX trades, and I used to ask him, what, how did you go about it? What gives you conviction to take up? And I think, again, it depends. I think if you get like a deviation, you've got a very clear invalidation. But when you're trying to find a level to short or long, I've seen SC build his positions 1/3 at a time. I think that's what gives me room for maneuverability. Like, okay, if I took a 1/3, you know, position size at a range low, but it starts pushing offside, I take a very small scratch. And at that point, assume this is the range low that I'm wanting to long. If I'm 1/3 in here, but it hasn't swing filled any levels, or it's not into a high time frame demand zone or order block, then personally, you know, you can start a small, let price go in your favor, start building dollar cost averaging, look for the shift in low time frame market structure, and then you can just ride the move up. But essentially, my preference is deviation, reclaim, over, under, whatever the hell you want to call it. If you remember, Zoran, we used to talk about QMs, Quasimodo patterns.
Oh yeah.
we see them all the time, and they're one of my favorite setups. But I don't think many people pay attention to detail in the way that, you know, we've discussed over the years, and we still see them time and time again. They are absolutely one of my favorite setups. But it's just waiting for that reaction back above, then I'll floor it, because at that point, although my invalidation here, I know that this level should really hold. If we start sliding below this level, I can cut it, because at that point, I'd have to take a full 1 hour loss, right? I know that, okay, this could have just been a squeeze, but I'm looking to play the probability, and the probability is acceptance above this level here, then go back for the range eyes. I think, honestly, I've got to thank Trader SC, because I don't think you can learn this shit. You can only learn by watching somebody do this in real time. And I think SC did some brilliant masterclass live trading sessions in 2018, 2019, which was the game changer for me, right? No matter how many courses I watched or videos or tutorials, execution is one of the most difficult things that you can do, because people shit their pants when it comes to pulling the trigger, or they're too scared to size up, or they freeze. They can't take the trade because, shit, what if I'm wrong? But what if I take a loss? And you've got to adapt your mindset where just reduce your size, even by 50, 60%, 70%. Just take the bloody trade if it's part of your plan, part of your system, and just go with it. You know, so Matic was another example why I took the trade as a swing fill. A lot of people giving me shit because they're like, oh yeah, you're gonna get stopped up. But as soon as I saw a swing fill on a weekly time frame, it's as clear as daylight. Like, if you're wrong, you're wrong. As long as you know where you're wrong, and you've got a very good invalidation level, take the fucking trade. There's nothing to be afraid of. You don't need to have 100% win rate, as long as over a long enough period of time, your data and your statistics that you journal and log should tell you what your edge is in your system. And one of my edges is that I do very well trading the extremities of a range. Even if it doesn't break down to the levels that I want, I know there's enough juice in here to capture a fairly good 2-3 hour trade, and I'll take profit, which I did at 114, 115. So, you know, at the end of the day, I think psychology and mindset has a big part to play in trading, and execution. But overall, I think when especially new traders, when they catch a trade and they get a good entry, they have a tendency to hold on to the trade. And lo and behold, before you know it, the 1 hour target that they were aiming for, they end up holding it because they think it's going to go even more in their direction, and that price isn't ever going to reverse against them. But a few hours later, a few days later, they end up puking it back at break even. And that's just shocking trading. If you're in a trade and your trade is going in your favor, in your direction, and then just to watch it come all the way back on you after it's been in a fairly favorable direction for you, and to puke it at break even for a loss, that's just disgraceful. There's no excuses for that.
I love that, first of all. Shout out to Trader SC. And I think one of the big things I've always learned from him, and I think it's even posted on his Twitter, it's, the plan and then the trigger and then waiting. This is where you fuck up, right? It's like
Yep.
people have a bias and they have an idea of like what they want to see. But then when it comes to the execution, which is, again, everything in this business, right? Like you're a trader. You don't get paid to have a bias. You don't get paid to post charts on Twitter and get likes and all that. No, you get paid to, take fucking trades and make money. It's that simple. So at the end of the day, I love the way you break it down and make it so succinct that, if you have a winning trade, I think a lot of times people get caught up. I've had this happen to me myself. You get a really good entry, whether it's a swing long, swing short, and you're like, oh, I caught the top, oh, I caught the bottom, but it's fucking irrelevant, right? At the end of the day, what matters is, do you take profit? What is the R on your trade, and what is your expectancy? And then you look back at your journal and say, okay, well, this is how I did. I journaled my emotions, right? I thought I had a top short. I was, very vocal about it on Twitter. It was all great. Just to watch it round trip. Yeah, like you said, that's a disgrace, man.
It is.
You're
It
not
is.
paid to just have a bias. You're paid to execute on said bias.
Absolutely. And there's so many opportunities in the market that it's we're not in that environment, right? And I think this is the problems that arose from 2017 Zora. I was living proof of that. 2017, you latch onto a bull market. I was probably the shittest trader around back then. I didn't even know what an SR level was when I first started. And I used to be in all these like Telegram groups and used to scratch my head thinking, how the fuck do these guys know to take profit at 36, 47, 58 cents, 60 cents? How do they know to buy at 30 cents? But I didn't really care because back in them days, it was just all sentiment driven. You could fucking throw a dartboard blindfolded and you're probably going to hit bullseye 9 times out of 10. It was just so easy to make money. I think we saw that again in 2020, 2021. So many people that enter the market caught the hype on the way up. But what did they do on the way down? They got absolutely obliterated. So, for those people who claim that, yeah, I've made X, Y, Z, did you journal it? Did you systemize it? Can you do it again if you could? Or was it all just pure luck and buying and being in the right place at the right time? If that was the case, why did you fuck up on the way down then? Are you just a bull market genius? So, to prove yourself, you've got to be able to trade both directions and let your P&L do the talking for you. Otherwise, don't come and tell me that, hey, XO, this guy made XYZ in a bull market. Big deal. Like, I know one guy who out traded me with one trade, and that's the truth. I think he put 100 odd grand into, I'm not going to name any names, but he put 100K into a project and he's walking away with 10 million. He's fucking out traded me in one trade. Does that make him a better trader than me? If we're measuring success by financial gains, then okay, fair enough. But the chances are, not everybody can do that. Not everybody's going to get that one strike lucky win. So
Chances are he's going to also lose that all the way on the way down, right? So it's like it's easy to make that money, but then once the conditions change, and it's no longer just up only bull market, that's when you give it all back and more, and then you become a trading addict, right? Trying to chase your losses.
Exactly. It's like, how do you make money both ways? Like, this was such a big move down on Phantom. There was so much money to be made. This is an alt season in itself on the way down, just as it is on the way up. And again, I talk about this time and time again. Like, everybody gets excited when price does something like this, rallies to the upside, right? The most difficult thing about a bull market is that, look, Zoran, we could have bought this back in June 2022. It's done absolutely nothing for nearly 9 months, but now finally it broke out. Okay, not everybody caught the move up, but the beauty of shorting the market is I don't have to go through this painful sideways range band environment to know when I want to do business from the short side. Once price rips up, I know that at some point, because this is a trended market, the probability of the distribution curve is going to play out. And I'm really thinking about, all right, when should I start shorting the market all the way back down again? Because that's where the money is in this environment. Trend up, trend down. But the beauty of shorting is you don't have to wait 6 months like this or 9 months to hit it on the way back down. You're just waiting for this rip up, time to sharpen your tools, hit it in reverse mode, and trade it all the way back down again. So I think that's the beauty of shorting versus longing in terms of like timing the moves. You just know that the short scenario is going to be just around the corner once this move has exhausted.
Exactly, and I think that's the thing, right? It's opportunity cost, right? Sitting in a trade, especially I think most people when they're shorting, they're playing on derivatives. You really need to be accurate and know exactly when you're getting in, where you're getting out, And like you said, waiting for that trigger to happen, because you're not going to sit in a short and pay funding for X amount of time. You want price to do exactly what you thought it was going to do. And if not, you cut it. You're very clear cut that one. I really appreciate that about you and SC both.
Yeah, that's really good. I'd be interested to hear your and ISO's views about, what do you think is in store for altcoins here? Do you think alts have got significant room to go higher, or do you think we are seeing probably a reversion back down to the yearly open at some point over the next 2-3 months? I think what's fascinating is the fact that we've just blasted off the yearly open, Zoran, straight off the yearly open.
With no retest, with no wick, right? That's
nothing.
I just see that, man, and I just get excited because I know eventually, right? And I learned this from you and SC. I remember like we talked about this in 2020 when we had a nice yearly open move. You said like, well, eventually we're going to trade back below. And at the time I couldn't see it until I saw it happen in real time. This really does make sense, and you really kind of opened my eyes to the whole fact that macro and zooming out to looking at the quarterly open, the yearly open, these are levels that get respected, and I've kind of included that in my trading over the past couple of years, because it really does matter. So I guess ISO, what are you thinking with altcoins right now? Because I feel like you're our go-to altcoin man here.
You gotta. I thought I was muted. Well, just to piggyback on. And we had kind of talked about like OP and Phantom. Like for me, it's so liquidity driven where I look for the opportunity and volatility around just like, I don't really care about so much of the trend because I think we're just in Chopville right now. And you can argue that maybe we're going to go up, make lower highs on a lot of things and the trend is down, but you can still trade the moves around. But like, for OP, right, there's a good example. Like there's 80 million in longs. So like relative to some of these other altcoins, I mean, you could have looked at AXS, you could have looked at Lido yesterday. That thing had a freaking sick move because that was a very clear-cut idea of shorts were way off sides. So then, you go look at Phantom relative to what XO had just talked about and run liquidity on this, and there's a lot of longs, right? So I actually had a question about to XO earlier. Like, look, right? Like, there's 262 longs to 66 shorts, and you're running on a 263 million notional value. And if you look at kind of the historicals here, like we reversed on a 126, right? So you can see that this is setting up for a distributive move back down. How far it goes, I'm not sure, but this is boom. Like you can start ripping all these guys out, I think. So do you get one more stab up into that level that basically XO was talking about? Like maybe you're just getting like 53s if it starts to clip them. But to his point about shorting range highs and then looking for the lower high and that being market structure based, like here's the confluence that you have in liquidity. And so I think going back to like what we talked about was just like the reason that the conversations that we have make a lot of sense to me is because he's doing a lot more of the technical like range low, range high, and then you're pairing it with liquidity and you get such a clear picture of who's off sides, right? So I'll be looking at short setups on these two. As a whole, what do I think about the market itself right now? Jesus, sorry about that. I would say, like, let's just take this for example, right? So you had your high here, you kind of came back down to support. Like, as he said, I would look at the 61.8 retracement, and then like maybe it comes back up here. You still have a setup to trade a short side down to like support down here, right? So I think it's extremely coin specific for me. I don't necessarily have a view on like all of the altcoins as a whole, because narratives may be a meme, but there are things that drive capital flows, and there are outperformers when things go down. And those are kind of the things that I look for, whether it be on the downside or the upside. It's a bit of a loaded answer, but that's like where my head is at right now.
Yeah. Oh,
I
cool.
appreciate that. And when you look at, the total market cap that EXO was showing earlier, right? And you asked me like where I think altcoins are going. And when I see that lower high that you just showed, that kind of solidifies to me that we are still in a very PvP space. The market there's no new fresh injection of retail capital coming into the market currently. So I think at this point in time, this is really just PvP only. And taking, high probability shorts at the range highs or, the quote unquote lower highs make a lot of sense to me. So in my humble opinion, I do think that, we are seeing just a rotation, like Trip said, from narrative to narrative. But at the same token, that capital is still in the system currently, right? So what I mean by that is there's no new fresh capital coming in, and you really just have to play the rotations. And then when you see the rotations end, and that's what I love about EXO and SC, they see these rotations end and they say, great, all the interest is in here. The late longs are piled in. Trip showed us the Delta on Phantom, it's building, and that hits some sort of tipping point. That's where you're looking to kind of smack it back in for shorts. So, the echo bubble in my mind is just the rally, this bear market rally. And that's always how it has been to me is we get up to 29 or 28, 29K, and that's kind of it in my opinion. It remains to be seen. I don't, necessarily believe in the whole new bull market just yet, and especially after EXO just broke down that range we had. It made a lot of sense to me. That just kind of solidifies my bias that I've had the past couple of weeks. But even so, more so now, because if we're in this massive accumulation phase, it would make sense that we're going to continue ranging for the foreseeable future, and maybe there's some sort of macro backdrop reason why we go back to range lows and, God forbid, we do a deviation, make lower lows. Who knows? But for the time being, I think just playing into each narrative, you have to be very quick, nimble, but at the same token, be aware that this is still a PvP market, right?
Yeah, I'd be curious to hear EXO's view on Lido, because this one is one that's actually like made higher highs, and then you have this weird deviation, but you're in a channel here. It gets bought up in the demand zone. It's super liquidity driven. Literally yesterday, there was only 2 longs left. So that is why you got an 18% move today. But like no reason so my plan right now is long, basically 240s if it gets there, and then play it to topside liquidity around the 3, right? Until this is like breaking down and clearly showing like bearish market structure. Like this is one that can outperform, and you can kind of look at it alongside both Ethereum and BTC as well, in terms of like how it's performing. So
Yeah,
he's got his ones that he wants to short. I have some ones that I want to long. I might participate in some of the short trades on those other ones because they don't seem as fundamentally sound. I know OP has a ton of supply coming online. That would obviously be a huge catalyst for selling. But yeah, again, it's super coin specific for me.
yeah, I agree with that. So it's like you've got to pick your market. You got to know which conditions suit your trading style the best. Something like Lido would probably screw me over both ways because looking at this price action, like fucking, is it a range? Is it a channel? It looks more akin to a channel. Yeah.
So this reminds me of like the Luna channel that existed at one point before, like way up. I think you could have traded like 50 to 90 at one point. I remember we were talking. This is a long time ago, obviously, but like this is a ascending channel for the most part that is basically just ping ponged around liquidity. Look at the high where Lido is. If you start breaking out of this channel and above that, then price discovery becomes interesting. Now, is the range $3 and then to $1? I don't know. It was an extremely explosive move. Like you kind of have to start breaking down significantly for me to think that this is going much lower. So for now, it's like play the liquidity, play the ascending channel that's kind of going on, and eventually it's going to resolve. Whether that's break down or break out remains to be seen.
Yeah, agreed. I think when I look at the Lido chart personally, I think it's one of the charts that somebody like yourself excels. You and Amoeba do really well in the lower time frame. When I look at this from a high time frame perspective as a high probability trade, it's very clear for me. There's 2 levels. Swing fill this, get back inside. I'll take a punt. It's in an uptrending channel. I fancy my chances that it goes back to the channel lows, and if not lower down, back to these lows here. Again, I do agree with you. This is some form of compression. We're respecting higher lows in the channel. Generally, you see these resolve by doing a clearance thrust, something that I've learned from Paracurve. It really spikes up and then dumps all the way back down to the origin of the last point of consolidation. So something like this would not surprise me as well. I can probably bring up the Paracurve article. It's one of my favorite trading patterns in bullish environments.
Yeah, no, I remember that.
Yeah,
I don't disagree with that, because at that valuation at $4, you might be 0.5 times fully diluted valuation to current TVL.
There we go.
So like I trade a lot of this around valuation too.
Yep, here we go. It's the clearance thrust, the pump before the dump. And this is exactly one of the patterns that I traded on Luna in 2021, I believe, that before it went to something like $1,900, sold Luna, started looking for shorts. But you can see the compression. So you can't define a range as such. It's just a trend. You're probably better off with the channel. But the point is these higher lows, it explodes to the upside, and then you get the retrace all the way back down. And the same on the in the downtrend market. You get these like numerous touches of the trend and then expansion to the downside before you get the so-called reversion play, or if you want to call it the echo bubble play, or currently on Bitcoin. It wouldn't surprise me if something similar like this is happening on Bitcoin as well. But this is one of my favorite articles. It's by Paracurve. So many great trading patterns on here. And this is something that SC put me onto back in 2018. So, big shout out to SC once again for being instrumental in my own development.
Yeah, so for me, like, I've paid such close attention to this coin, and I have a number of reasons why, that, like, I just stick to things that make sense to me and I understand because I've studied them so much. I can't really jump around from altcoin to altcoin. Like, I tried to trade Mask the other day. I was like, oh, liquidity here, but I hadn't been paying attention to it. Lost some on that, made my money back trading Lido this weekend on a short squeeze and a little bit today. So it's like, when as a trader, this is just like a mental lesson for everyone. Like, stick to the things where you know that your strengths are. And if you pay attention to something, you become a master of that domain. So like sushi was an example. We traded that a lot, right? And you study liquidity on that, you can see why price kind of moves from one area to the other. And it happens when you're not trending and you're in a range. But Lido's in a channel, so you can kind of employ a similar approach to it. But just looking at this like kind of setup here is you can take this low to this high and then drop a fib in and do it, and you're going to probably get around this cluster here in the 240s, which is an SR flip. Probably draw a diagonal here. Like, you could come up with a number of different confluences. I think it's some lower time frame Kijun levels. So like the way that this has been trading is like you get people off sides down here. Yes, you had your little CPI thing that like you got your fake out, but if this comes down to here, let's say like 240, shorts are going to chase it down, and so you'll probably start to build this delta back up, and then you have your kind of top side liquidity here, and maybe that's going to get you to the top of the channel. So there's like pretty good setups on this that I'm looking at, and that's only just because I've been studying this since the start of the year, basically.
Oh, yeah, so you did some insane numbers, didn't you, back towards October, November, and sushi? I think you, if you don't mind me saying, you took a 10K account into six figures, right? In a space of what, 6-7 weeks?
Yeah, which was just like trading liquidity on sushi. Yeah. So to me, Lido is like the volatile sushi coin, and so I look for those opportunities, milk them until volatility dries up, liquidity dries up, and then you wait for the next setup.
I think that's the beautiful aspect about this market is it's like you've clearly defined your strength in certain environments, which allows you to really floor it hard. And I think that's the key point. The key takeaway in trading is just define something that you can do consistently over and over again and is applicable to most contextual environments. If you can do that and manage your risk, the probabilities are you'll perform well against the overall market and you'll do very well for yourself. I think too many traders try to come up with different trading strategies, trying to find an edge, where in reality, once you go full cycle, you realize that, it's not about understanding all these various tools. The true edge is in your own discipline, and once you can master that, you'll perform very well in the markets.
I love that. I can't echo that enough.
It took me a while to figure it out.
Is.
It took me a while to figure it out, but this is it's a marathon, not a race, right? So it's a huge mental battle dealing with like this on a daily basis, right? This is your job. So you step into the arena every single day trading these markets, like assets that move 15, 20% at a time. Like you gotta make sure you're pretty dialed on these ones.
Yeah, absolutely. I think silly season will come back. Silly season where you just play low IQ moves, you buy a shit coin. You don't have to trade it, you just hold it. That's not trading. But it's probably going to be the one point in the market where you're going to make a shitload of money just because you managed to buying at the lows, heading into a market cycle or an altcoin cycle. Yeah, the super cycle, man. So it's in these environments, if you're waiting for that, you might as well just log off, piss off, do some FA research on coins and come back in 9 months, start buying into those coins and just hold. It's as simple as that. If you want to trade, then let's talk, tune into these streams and all the other streams if you truly want to understand how to trade. But ultimately, I think there's a beauty in mastering shorting because it helps you identify danger very, very quickly. Like on the way up, euphoria can take over, greed can take over. People start talking about 90K or 100K on Bitcoin. In all honesty, it was so fucking simple. One single line outtraded the fucking market. It was just literally a deviation. If this was a 5-minute chart or a 50-minute chart, you're calling this a deviation all day long. You get out of the market, or you can short it down. It was as simple as that for me. So having seen this back in November, that was a good enough reason for me to get out of the market, fully out of the market. And sometimes it's just about understanding at which point is there likely to be a potential shift in the market. Because look, if I took profit here and this was a short-lived deviation, any reclaim back above this level, fine, we take it higher for a third drive. 1, 2, you're looking for that third drive up into 75K. But once this happens, I'm out. Thank you very much. I'm happy to wait for the reclaim. Let the market prove to me that it's going to go higher. I'll step back in. Otherwise, I'll just ride it all the way back down, sat in cash and accumulate more Bitcoin and buy more Bitcoin at the lows. So sometimes that's all it is, really. And it's no different to what we've got here, right? Assume Bitcoin does trade above 25K. I can guarantee that so many people are going to get bullish. The minute it drops back inside, just get out of the market, take your profit. Probably going to trade back down to 18, 20K, and we'll see what happens from that point onwards.
I love it, man. Your mindset is something I really admire, and I learned a fuck ton on the stream today. This has been enlightening and a half. I think I speak for ISO and myself when we really appreciate you coming on today. This has been just straight alpha from people who've just been tuning in, and I think you made a good point about differentiating between traders, right? We talked a lot about trading today, but towards the end, just recently talked about quote unquote investors, bag holders. If you're not in the trading business, that's completely fine, but understand where your edge lies, and that can just simply be as left here as possible, buying something and then holding it for a long period of time and hoping you catch that market cycle, right? So if you're in that camp, that's completely fine. I tend to do that as well sometimes, but understand that don't try to trade around your positions. I think that's the worst thing you can do. I remember had I had some phantom derivatives available back in the day, I 100% would have sent my coins to whatever derivative exchange, and I would have traded my way around the core quote unquote investment position and just chop myself up. So I think it's very important to differentiate between what you're actually doing in the market. Are you a trader? Are you an investor? And keep those two separate. If you're a trader, have a system around systematic trading like Exo does. If you're an investor, create some principles and stick to those as well. The whole point is to know where you are and not try to mix the two, because you're gonna screw up. That's just the truth of the matter. So yeah, I really appreciate you coming on, Exo. This has been an incredible stream.
Thank you, man. Pleasure to do it with you guys after it's been long awaited to catch up with you guys on stream, and hopefully you can return the favor, both of you, and jump on my stream in the near future.
We'd love to. It'd be an absolute pleasure.
I got one more question for you, Exo, because I'm curious how you look at fibs, because I tend to look at like the most extreme swing points where you can take shorter term fibs and look at local resistance levels. I mean, I'll share my screen because I'm looking at OP right now. And clearly this is our high right here, right? And this is like we broke down here, correct? And so like you pull the fib here down to the low, which is basically the range low, right? This is your demand, and we had a reaction off of it. Or do you take this high, and now we're at the 78.6, given the delta that we just saw? Longs are way off sides. Short term, come down here. Do you think we can actually make it back up to the 270 area or maybe 260 and sweep this high, have confluence with maybe this diagonal? Like this breakdown area is interesting to me, but
I would take it one step further. If you see the chart on the 25th of January, the swing high to the left, sorry, on your chart, ISO.
25th of January?
Yeah. You see that? Just slightly low down. Just flatten a line across the chart. There's your mid-level.
Yeah.
Give me an over. Give me an over and an under. I'll show that with the time validation.
Oh, here, take this high and then come down.
Yeah. So give me an over and under.
That could give you the 260. Like the 50%. If things are super bearish, you don't often get this golden pocket. I've noticed.
You don't get the perfect retest in a downtrend.
Yeah, exactly. I think this high though can probably get taken, and that would be your liquidity grab. And maybe
I think so too. I think so. I think that's what I said earlier as well. I'm looking for one more squeeze up on alts. I think people are shorting this market right here. Yeah, they might get away with it, but I still think that they might be eagerly shorting. I sometimes think when you're looking to short the market, you want to see a fast reaction off a level within a day. If it's hanging around at the same level, that is a cause for concern when you're looking to fade the market. So essentially, you're looking for a fast reaction point, and when you see prices grinding at a level, you have to question whether this is the inflection point or whether it's slightly higher. And for me, I have to agree with you in the sense that I am looking for a squeeze higher. I don't have any positions open apart from a 20% short on Litecoin from back in from 92s, having sold 88s and kind of just wanted some short exposure, but it's only 20%. I think I'm going to come back tomorrow and see where the charts are, see where prices. I just look across the board and I can't see anything favorable according to my system where I really want to load up. So I'm happy to wait. If it's just a patience game, really. Sometimes you're not going to get the trade set up. Fine, you'll get it another day, another week. It's about cash preservation and taking the best trades only. And you know, I bet you if people had two accounts, right? Two trading accounts, one for patient trading only, where they wait for the absolute extremes or the levels they generally wanted to trade, versus a second account where the fear of missing out on a trade. I bet you if they traded both accounts in tandem, one for the patient trades, one for the fear of missing out and the scratching and the taking losses and random wins here, guarantee the patient account would outperform the more aggressive accounts. So I think sometimes that's how I look at trading. I have three accounts. I've got a small account on BitMEX. I've got two on Bybit and a couple here and there. And each one has different cash balances because my main accounts is where I really look to do my business and get paid for the month. I'm looking for one or two big moves in a month to really get paid. The other accounts, just more about fucking about, really. Lower time frame trades, little day trade scalp when I'm at the desk, just playing around. It's just more like a game, isn't it, really? So that's kind of how I treat the market now.
Love it, man. This has been amazing.
Oh wow, it's been how long? An hour and 17 minutes.
It's the perfect episode. I don't think we could have had a better next guest on. I really appreciate you coming on, XO. I think with that about wraps up today's episode. XO shared a ton of alpha today, guys. He really talked about everything from high time frame overview, looking at the markets from total market cap, excluding Bitcoin, what that gives him in sense of triggers for actually taking shorts or longs on altcoins, knowing when not to take shorts on altcoins, like you mentioned earlier. And then he talked about just the specifics on Phantom, Matic, a few others as well. He really got into the weeds, guys. You learned a lot about the way he approaches ranges. I mean, we got a whole mini range masterclass from him. And I mean, I learned a shit ton on this episode, and I hope you guys did too. So before we go, I just want to thank our sponsor, Phemex, once again. And if you enjoyed today's episode, shout out to SE for making sure everyone smashed that like button. It seems that EXO lost some sort of bet. Maybe that might be to go long Matic. We shall see. But other than that, make sure you guys smash the like button and subscribe so you'll get notified whenever we go live in the future. And thanks again for everyone who tuned in today. And we'll see you next week. Captain Cole signing out.